Let's turn now to the case of the MLB. The MLB was traditionally considered imbalanced, and this is because free agency typically increases imbalance, as we saw before. There's a big return to wins in a larger market. So imagine a situation where teams could only acquire players through a draft process. In this situation, it'd be harder for larger market teams to acquire the better players. They probably could spend more money on scouting and things like this and prepare better for the draft, so on and so forth. But at the end of the day, it would be difficult as opposed to the normal, very straightforward mechanism where larger market teams can acquire better players through free agency. However, the MLB is not currently imbalanced by the metrics. Their dispersion of wins is actually similar to other leagues, and World Series wins is actually even more balanced. So we're going to turn to the idea of altering competitive balance. But before we really get into the different ways that leagues attempt to alter competitive balance, we want to consider the invariance principle, because the invariance principle is going to tell us something about the need for leagues to attempt to alter competitive balance. And let's take this idea of free agency mentioned on the previous slide, and this notion that it causes imbalance, because economic theory suggests that this actually shouldn't happen. And that's because one of the major ideas in economics is that resources flow to their highest use. So changing property rights, i.e. the control of the resources, changes who ends up getting paid, but doesn't change where the resources end up going. So what happens in a market, let's consider a market that isn't a sporting market. A commodity will have different potential uses. Steel could be used to make buildings, could be used to make cars, could be used to make any number of products. How is it determined in a free market setting where those end up going? It goes to the places that are willing to pay the most for said commodity. And what this means is they will go to their highest use. What's the best use of the steel? Is it in making structures? Is it in making other things? Well, if the best and highest use, the most valuable use, is in making buildings, then that will command the highest payment for the commodity, and that resource will flow to that use. Well, in this case, in our free agency situation, we're going to see that this actually works the same way. And so which team can most use a particular player and their particular unique set of skills and talents will determine who's willing to pay the most. As we said before, consider a situation where an MLB team has the best shortstop in baseball, and the second best shortstop in baseball goes to free agency. The team that is the largest market team with the best free agent shortstop is actually not going to be the highest use of that shortstop. They might have to move him to second base or alternate play, DH that player a certain number of days. That won't get as a high of return to that team as a different team that perhaps has a need at shortstop and will therefore be a better match in that situation. And so it's this idea, the invariance principle, that shows us that free agency doesn't necessarily cause imbalance. So a moment ago we said, well, what if there's only a draft? Well, of course, in that situation, larger market teams will still have higher use for that particular player, those high quality players, and therefore might make trades, take on larger salaries, etc., and do so in other ways. Now, there's still sort of barriers to how freely that market will move, and so we might get closer or further away to a free market equilibrium in that case, but the same basic principle is going to apply. Let's take a look at an example of FIFA Brazil 2014. There were 92,000 tickets, and the market clearing price was about $150. But FIFA instead decided to only charge $10. Of course, this naturally led to quantity demanded exceeding 92,000. At the end of the day, there's only 92,000 tickets, but more than 92,000 people want tickets. They have to be rationed one way or another. This is just a fundamental idea, and oftentimes people who ignore free market principles sort of miss on this most fundamental fact. If there's not enough to go around, some type of rationing must be done. It could be first come, first serve. We just make a line, whoever gets there first. This is why we see things like maybe Black Friday sales and stuff. People will line up, and the earlier you're willing to get there, the longer you're willing to stand in line on a cold November night, the further up in line you will be, the quicker you'll have access. That's a first come, first serve. Others would be like auctions, right? So instead of putting it on a shelf at a price that will clear, we auction them off and then go in successive number till we're out. Of course, there could just be nepotism, right? It doesn't have to be market. It doesn't have to be financial things that ration this thing out. Perhaps you have to know somebody. Perhaps you have to have a connection inside and a more of a political mechanism than a market mechanism. What FIFA opted to do was a lottery. So in this situation, 92,000 fans won the right to buy tickets through this lottery drawing. Now, this seems like, okay, well then whoever wins that lottery is going to be the one that goes to the game. But of course that's not true so long as people are free to trade. The final allocation in that situation is going to be the exact same. Instead, what will end up changing is who gets paid. If there's no lottery, then FIFA will get paid because instead of $10 for 92 tickets, they'll have an average of $150 per 92,000 tickets, and their revenue will be much, much higher. In this situation, the lottery winners are the ones that eventually get paid. Consider, I value a FIFA ticket at $20. I win the lottery. I get the ticket. Somebody who values it $150 is going to come up to me, offer me $150. I paid $10. I'm going to get $150, so I'm going to have $140 worth of profit. I'd rather have that $140 than I would a ticket I value at $20. So the $20 versus the $10 ticket price would be enough for me to enter the lottery, assuming that entering the lottery was low or no cost, right? But instead, we see a situation where whoever it is that wins the ticket is going to be the one that goes through and gets the benefit of having won that ticket, whether they either value the ticket at $150 and only pay $10, so they save $140 they were willing to give to FIFA, or you value it somewhere more than $10 but less than $150, and people who value it more come along and pay you the difference. So here's a picture of, this is not actually from FIFA, but this is from English Premier League, where fans protesting the different prices for the ticket, saying all you should actually charge is $20, which of course, if this were true, right? If 20 was plenty and their greed knows no limits, somebody would have to explain to me why the stadium is completely full, since nobody held a gun to these fans' head, and they bought these tickets and so therefore filled up the stadium. So let's turn this invariance principle back to free agency, right? If a team owns the contract, as they do with a first-year player contract, so when you're drafted, right, the only team you can sign with is the team that has your drafting rights. You sign with them, so the team has that contract, right? So now if you want a particular player, the team that holds the contract is the one that gets paid, and they typically are going to, in order for the other team to acquire that player and their contract, they're typically going to get other players in a different configuration that might better suit their team. So if I have a young star pitcher and I want to trade this star pitcher away in order to get more position players, I'll get paid, in this case in player talent, in order for another team to acquire them. If the player owns the contract, i.e. free agency, then they're the one that gets paid, which is why we see the second contract for professional players, especially in baseball. The second contract is the one that is extremely lucrative for professional players, because that is when they are able to take advantage of the property right of their contract being theirs and not the drafting team. Now, with the FIFA example, there's a couple of important transaction costs. Remember, we talked about transaction costs before. The first, of course, is advertising. I could win the lottery and have the ticket, be willing to sell it for 150, but if nobody knows I have it, there's a search cost for them, and it's difficult. Now, as we've talked about before in this class, things like StubHub, etc., make it such that these are very low costs. They get some proportion of the ticket that I'm going to put up, but it lowers these transaction costs, and that is what allows people to find the other individuals. Now, in the case of a team making a trade or a free agent looking to sign a deal, there are actually also search and advertising costs, but it's just that there's only 30 or 32 teams. There's only a fixed number of free agents, and so that costs in this case is probably more like negotiating than it is advertising and search. Okay, let's look at some of the ways teams actually try to alter competitive balance. One of the things they do is to try to limit how much teams can spend on players, and they do this through salary caps and luxury taxes. So a salary cap is a restriction on the amount a team may pay players. There's two general types of this, although they're not hard and fast rules. One is a hard cap, which can't be exceeded for any reason, and the other is a soft cap, which may be exceeded in special circumstances, and this is typically what we see in professional sports. This comes along with a salary floor. So players, if their players' union, if it agrees to a salary cap, that limits how much they can be paid, right? And so in exchange for that, they have to get a salary floor as well. So you must spend a certain amount if you're not going to spend, if you're going to put a limit on how much teams can spend. And this is typically 90% of the salary cap. The MLB doesn't have a cap. Instead, it has a luxury tax. So let's take a look at these, the upper and lower limits on these salary caps. For the 21-22 season in the NFL, the upper was 208. In 2020, it was 198, and then the lower, like I said, about 90%, was 180 million. This is up from 168 in 2016. In the NBA, the cap was 121 million in 21-22. Up from 109 in 2019-2020, and up from 113, which I guess actually had gone down in 2019-2020 from 2016, but then back up in 21-22. The NHL went from 70 to 81, and then stayed at 81 in 21-22. So a salary cap has two factors, the revenue base and the player share. So first, league determines what portion of the team's revenues, remember we talked about all the different sources of revenue that a team gets, are counted in the salary cap. So ticket sales, merchandising, stadium sales, etc. are all potential sources of revenue, and different leagues count them different ways. Sometimes playoff revenues count or don't count. Special seating is typically exempt, etc. The players' union agrees with the league on what counts toward the revenue base, so that there's a number. Team has a certain amount of revenue, and then that's aggregated up to the league, and then what percentage the players get. And so this percent of revenue ends up going to the players. So typically, tickets, TV fees, and operating income are counted, where luxury suites, fixed signage, and stadium naming rights, etc., are exempt. So we calculate the amount of revenue that comes from things like tickets and TV, which of course are the two big ones, and then other forms of operating income, and then we determine what percentage of revenue ends up going to the players. So the NFL has a hard cap, sort of, right? A harder cap, like I said, it's not really like a black and white, sort of very clear situation. But the NFL has a much harder cap, where the NBA has a quite soft cap. And this is because they have multiple exceptions. There's three general types of exceptions: a mid-level salary, where you can go over the cap for one average NBA salary. You can go over the cap for a rookie salary, that is the first deal that a player signs. And then, of course, probably the most famous one, which is the Larry Bird exception, where you can re-sign a player that you have had to a deal, which is why when NBA players are going to go to free agency, the team they came from is the one with the highest ability to pay them. That's where they can get the biggest contracts. Okay. The other way that this is done is a luxury tax instead of a salary cap. And this is just a surcharge over a given level. And this is what's called a competitive balance tax in the MLB. And you're given a certain threshold. Once you cross over the threshold, which for the MLB is around $200 million in player payroll per year, you then pay a tax on every dollar over which you spend over that cap. Teams that do that multiple years in a row are called repeat offenders. Teams like the Yankees and Dodgers are often in this category, and you have to get under that $200 million. It's not exactly $200 million, but approximately $200 million revenue player payroll number. It's not revenue, excuse me. In order to reset that penalty, and the more years that you're above it, the more that penalty accelerates, and the further you are above that number, the higher penalty you end up paying. Okay, probably the classic, the most interesting way that teams try to alter competitive balance is what's called a reverse order draft. And that is drafting first-year player draft according to the order of the finish in the previous season, with the teams with the worst performance getting the highest draft picks. And the NBA, their draft has 2 rounds, and the NHL 5, and the NFL 7, and then the MLB used to have 40. This actually changed in the shortened 2020 year. And MLB used to go and basically until MLB teams wanted to stop drafting. And the reason this is feasible is because there are many levels, right? NBA basically just has the professional team and then what they call the G League. They're similar for the NFL with practice squads, etc. But the MLB has AAA, AA, 2 levels of single A plus rookie ball. So there's lots of teams. So an MLB can really fill out. They usually have upwards of 200 players per team across all the different levels, even though there's only a 40-man roster for the major league team, only 26 of which are active. Okay, so the reverse order draft promotes balance, right, between seasons, because worse teams get better players by drafting higher in the draft. Of course, the problem with this is that it can actually backfire, because it could actually worsen in-season balance. We might get better between-season balance in exchange for worse within-season balance. And this is because of a phenomenon known as tanking. Some high-profile examples of this would be the Philadelphia 76ers, when they were tanking in order to get high draft picks that eventually became players like Joel Embiid. There's several high-profile cases of this in the NFL with the Dolphins and Tua Tagovailoa, the Jaguars and Trevor Lawrence, and of course probably the most high-profile case ever is the Colts and the classic suck for luck that they went through in order to get a franchise quarterback. It's very common as well in baseball, although even when you draft high-profile players in the MLB draft, they often don't show up in the major leagues for some years. But really high-profile cases of this were the Baltimore Orioles, the Houston Astros, and the Washington Nationals. The Washington Nationals built their team that went on to be quite successful and eventually win a World Series around several seasons where they lost over 100 games, which is quite a high loss total, in order to draft players like Steven Strasburg and Bryce Harper. The Astros, of course, did the same, and that turned into players like Alex Bregman that eventually led them to multiple World Series. Now, the NBA and the NHL have a long history of trying to use a draft lottery to offset this, where you can raise your odds of getting the number 1 pick, but you're not guaranteed it, and they have actually changed 4 or 5 times over their history the structure of the lottery to try to figure out how to still have a reverse order draft but not worsen in-season balance by encouraging tanking, none of which has ever worked. And of course, ahead of the 2023 first-year player draft, the MLB instituted its first lottery, and so now the NBA, NHL, and MLB all try to offset tanking with a lottery, probably to very little success. Okay, Another way that the market might respond to competitive balance is through what we might call Moneyball or statistics based approaches to player acquisition. This Moneyball era really began with Oakland A's and Billy Beane. This is highlighted in a book and movie of the same title, Moneyball. The MLB typically, sort of traditional way to evaluate talent is what's called a tools approach, and they evaluate players, position players, based on 5 tools. That's their arm, running speed, their hitting power, their defense, and then of course their batter's eye and bat to ball skills. This is called the 5 tools in baseball. What the Oakland A's, Billy Beane, and his team realized is that there actually becomes a market inefficiency if you evaluate players based on their skills, because there are other types of things that are not very well captured by this. And during their era of baseball, this led to overvaluation of home runs and batted ball productivity, and an undervaluation of things like drawing walks. And so the A's then focused on acquiring players who were good at drawing walks and getting on base, even if they weren't sort of as good at hitting for power, because the market paid for home run hitters and didn't pay for players who got walks, which allowed the A's to pay less for good players that were good in ways that the market didn't currently value. This led to a first mover advantage, which is if you're a team or a firm that's competing in a particular situation and you're the first team to employ a certain strategy, assuming the strategy is effective, you have an advantage being the only one that is doing that, and then over time being able to refine that before your competitors catch on. And this led to the Oakland A's having a very successful time period during which they had a lot of regular season success that didn't translate very well to the playoffs without spending a lot of money. And in this case, that first mover advantage was related to the application of sabermetrics, which we've discussed before in this class. What this really predicated on was a capitalization of other teams having bias. And in this case, the bias was loss aversion. So if a general manager constructs a roster or a coach employs a certain strategy, and that strategy fails, if they've gone against the conventional wisdom, they're more likely to be fired or lose their job. What is this person doing? They're crazy. They don't know anything. But that's because it hurts more to lose than it does feel good to win. So we often have a bias as humans again towards trying not to lose more than we're trying to win. And this is especially prevalent in a situation where there are only 30 Major League Baseball GMs in the league. There's only 30 coaching positions. If you get one of those, it's highly competitive, and you really don't want to lose such a position. And so you might be very, very loss averse, which causes you to not want to make changes. So professional sports is actually very slow to adopt new strategies, both in roster construction and on-field play, because those coaches and managers don't want to lose their jobs. A good example of this is why we see a lot more innovation in offensive and defensive strategies employed in college football than we do in professional football. And actually, you will often see professional coaches going to college coaches to learn their systems, because there are many more jobs in college football, and those kind of coaches can be much less loss averse because they are not competing for quite as small a pool of jobs, and there's more room for variation in different play and play style. And so we actually see a lot of innovation happen at lower levels in football that we don't see happen in professional level ball. Okay, the last attempt to alter competitive balance that I want to talk about is the NFL schedule adjustment. So back when there were 16 games, they've now increased it to 17 games. What the NFL did was try to make the schedules harder for teams that finished higher, did better in the previous year. And the way that they did that is, of course, there's 2 games against each of 3 divisional opponents. You're just in your division, so you're going to play those teams. There's no getting around that. There's no altering competitive balance in that. Then playing 4 games against a conference division, which rotates around so that you sort of have even play and you get to see all the different matchups over the years. And then 4 games against one division from the opposite conference for the same reasons, right? And then the adjustment part here is these 2 games against the same rank opponent in a division they would not otherwise play. So not this division and not this division, and of course not their own division, right? So you might have an NFC team that would of course play their 3 divisional opponents. Then they would play one of the other 3 divisions, right? So East, West, North, South. So if we're talking about the NFC East, perhaps they would play the NFC West. They'd play all 4 of those. And then perhaps they'd also play the AFC, let's say North in this case, and they would play all of those. Then they would also play 2 games against teams that are not from the NFC East, NFC West, or AFC North, which of course leaves several divisions to choose from. And they wouldn't play, but the team that they would play, so if you had a team that finished first in their division, then they would play 2 first place divisional opponents that they wouldn't otherwise play, which would then make their strength of schedule quite a bit higher and make their schedule somewhat harder, sort of leveling out competitive balance.